Good morning, Vietnam. Well, today is a really interesting and special day. Today, the stock market took another butt whooping, and I know you're nervous, and I know that there are lots of crazy things happening right now. And I'm going to break down for you exactly what I'm seeing. Once we get done, you will feel a little less nervous about the market. And at the end, I'll tell you about a stock that I like that I'm actually going to invest in right after this podcast is over. So get comfortable, buckle up your seatbelt. We're going to get started on the Black Financial Channel right now. Good morning. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black wealth and Black economics every day, sometimes as much as 10 times a day, under one condition. The condition is that you don't mind that we are B1. You ain't got to be Black to be here, but we love our community and we want to see our people win. B1 also means that we train our children on wealth. B1 means we break generational curses. We don't continue them. B1 also means that we want to build our community. We want to close the racial wealth gap. And we do that by being consistent, solid, strong investors. If you agree with this philosophy, put a hashtag B and the number one in the chat. Everybody put your B1 in the chat so we can get started on the conversation today. Hashtag B1. Everybody put a B1 in the chat and let me know that you're okay with us loving ourselves and doing the things we need to do to be successful and putting ourselves at the top of the priority list. If you agree with that philosophy, then put a B1 in the chat. All right, guys. So how are your stocks doing today? Give me an up if you're up. Give me a down if you're down. Let me know. Let me know if you are if you're winning today. If you are winning today, then that probably means that you have some odd stuff going on in your portfolio because a lot of people are not winning today. I hate to say it. It's kind of a sad day to be an investor. A little bit of a pain in the butt. A little bit of struggle. A little bit of trauma. A little bit of drama for your mama. This is a market that is not for the faint of heart. This is not a stock market that is one for just anybody and everybody to be involved with. This is not a stock market that you want to be in if you are not trying to get rich. This is a stock market you want to walk away from if you are not ready for the challenges that are in front of you. It's like New Edition. One of the guys from New Edition is actually in the Black Business School, and he noticed that I love to use New Edition references because some of those Belle Biv DeVoe songs and New Edition songs were so great in terms of metaphors for life, and they had a great song. Remember Johnny Gill? Can you stand the rain? Right? So basically, the stock market is asking you, can you stand the rain? And one of the things I want to tell you, and I saw somebody said that I jumped out of the market a couple months ago. I understand how you feel. I get the fact that you feel like that's the right move. I understand the need to kind of walk away from all this chaos right now. But one of the things you must understand is this. Are you listening? Let me know if you're listening. I'm about to give you some game right now, help you understand something about the market. This is coming from a guy with a PhD in this stuff. I've been studying over 100 years of data on the stock market. I've seen this 1,000 times. This is where millionaires come from. This is where rich people come from. This is where people make their money. People don't get rich during the boom, jumping on the boom, grabbing onto the trend after everybody else has done it. People get wealthy during the dips. People get wealthy when stuff is underpriced. Do you understand who understands the number one rule of making money? What's one of the, if it's not number one, it's got to be like top 10, top 5, something like that. What's the number one rule of making money? Buy low and sell. What? Give me the other word. Buy low, sell low. Like, does that mean, like, so when the market goes down, you're supposed to sell? Buy low, sell what? Sell high. Buy low, sell high. Buy low, sell high. But some of us, unfortunately, we're trained in the wrong way. We were trained to buy high and sell low, right? Because we are trained to follow the crowd. And the crowd, when the crowd comes, the prices go up. When the crowd comes, stocks are expensive. When the crowd comes, then everything that you're trying to buy is insanely priced. So you're buying high. And then when things get bad and the crowd leaves, well, you say, well, I got to leave too. I got to sell now. I got to get up out of here, right? So you literally did the opposite of what rich people do. You did the exact opposite of what rich people do. Rich people buy low, sell high. That's why they got rich. Poor people buy high, sell low. So what you're doing effectively, if you're not careful, if you let go of all your stocks right now, you are basically selling your stock cheap to somebody who is a long-term investor. Warren Buffett said it best. Warren Buffett said that wealth is nothing but a transfer from the impatient people to the patient people. Wealth is nothing more than a transfer for the people who have a short-term vision to those who have a long-term vision. Wealth is a transfer from those who can't see the big picture to those who can see the big picture. So the thing that you never want to do in investing is you never want to be small-sighted, and you never want to be what they call myopic. Myopic is short-sighted. If you're small and short, then guess what? Your money is going to look just like your vision. If you're small and short, then you're going to have a tiny little vision, which means you're going to always have a tiny little bank account, which means your wealth level is always going to be as tiny as your vision. You don't want to be small and short. You want to be big and long. Size does matter when it comes to investing. Size matters when it comes to money mindset. Size matters when it comes to your ability to build wealth. So if you want to do well, you gotta be long and you gotta be big. And I'm using that weird sexual metaphor for a reason, because maybe that'll get your attention. Size matters. Does everybody understand what I'm saying? Do you get what I'm saying? Now, I had to start the day off with this conversation because I know that you're feeling a certain kind of way. I know that it hurts to look at your portfolio. I know what it feels like to look and see all that damn red. Man, I hate the red. I don't enjoy the red. I like the green. My whole portfolio turns green when it's when things are good. But today's not a green day. Today's a red day. Every day can't be green. Every day can't be wonderful. Every day can't be a winning day for you. So anyway, what I'm going to do is I'm going to go through some dynamics that I'm noticing in this market right now. And when we get done, you're going to be very comfortable with what's happening. You're going to understand it a lot better. Also, at the end, I'm going to grab a stock or two that I really like, that I actually believe constitutes a good investment. That way we can walk away feeling good and knowing that we have a long-term strategy to deal with this stuff. You got it? We ready? All right. Hit the thumbs up button. Thumbs up, thumbs up, thumbs up. Share, subscribe. Also, I wanted to mention to you guys, if you're looking for some kind of wealth training that might help you get through things like this and make money in situations like this, there is something that we have that's very popular called the Black Wealth Bootcamp. And if you go to blackwealthbootcamp.com, you can take a look. And you can also use the discount code Dr. Boyce to get 20% off. We saved all the recordings. Everyone loves it. It's extraordinarily good. It's in the Black Business School. It'll help you and your family understand wealth at a very high level. You'll understand it better than 95% of all people, because I know what I'm talking about. I've been teaching college students for 30 years. This is what I do. So I love times like this, because this is when I get to show you what I know how to do, because it's hard to show that when everybody's making money by throwing fish in a barrel, right? In 2020, it was easy to make money. So everybody could claim to be an expert because there was nothing really testing their expertise. 2022 is where the experts get to really show you what we know that's a little bit different from what everyone else understands. All right, so a few things I'm noticing right now. Number one, how many of you own Bitcoin? Does anybody own Bitcoin? If you own Bitcoin, you're probably hurting a little bit because Bitcoin is getting body slammed. Bitcoin is below 24,000 right now. Bitcoin is declining because typically when the market is in a situation like it is now, where consumer confidence is low, and you have these inflationary pressures and these challenges, these risks in the economy, the appetite for risk assets, the appetite for risky crypto drops. Investors don't want to own crypto in an economy like this. So your Bitcoin's probably going to keep on dropping. It could drop as low as below 10,000. If you are a believer, this is where faith comes into play. If you're a believer in Bitcoin, if you're a believer in crypto, if you believe that those things are going to work, then fine, go ahead and double down, keep buying into the dip, and then eventually, I think Bitcoin, especially in Ethereum, are eventually going to recover, but it may take time. It may take time. Number two, the number one catalyst right now of what's killing the market is inflation. It's inflation, inflation, inflation. Mainly in the big components of inflation that are really getting ugly are the cost of food. The cost of food worldwide is going way, way up. I think the cost of rice is about 90% higher than what it was a year ago, or maybe 70%. Is some insane number. So rice and grain are going way up. A lot of that's connected to what's happening with the war in Ukraine, etc. Also, the price of energy is going up for similar reasons. So the cost of gas this week hit $5 a gallon for the first time in since I think forever. I don't think it's ever hit a national average of $5 a gallon. So ultimately, the cost of food, the cost of gas is going up. The Federal Reserve right now is trying their hardest to slow it down. I don't know if they can, because I don't know how much control they can have over the cost of food, which might be linked to wars in Europe, or the cost of energy, which is also linked to wars in Europe. But the Federal Reserve is going to try. They're going to, later on this week, the Fed is going to make an announcement. That's the third item on my agenda. They're going to make an announcement where they're probably going to increase interest rates by 50 basis points. If they go to 75, then you're going to get more. You're going to get more blood in your stocks. You're going to get. It's going to feel like they came in and just put a knife in your chest and twisted the damn thing. And so you got to brace yourself and get ready. Jay Powell, the chairman of the Fed, knows his credibility is on the line, and if they make a move that goes extra hard on Wednesday, that could hit your stocks like a ton of bricks. They're trying to control inflation, and what they're doing is they're pushing the economy toward the brink of a recession in order to do that. They have to do this because they messed it up. They have to do this because they made mistakes. They have to do this because their policy over the last decade has been incredibly inflationary. It's been ridiculously ridiculously loose when it comes to money. They've killed the value of the dollar. They've engaged in what is called quantitative easing for a very long time. Now they have to do the opposite of quantitative easing, which is quantitative tightening, which is like having somebody just choking you. All right. So anyway, do me a favor, hit the thumbs up button, thumbs up, share, subscribe if you have not done it yet. Just so you know, I'm gonna put my website up here. It's boycewatkins.com. I have free resources. I have some stock picks that I like, things like that. So if you want to join, get on our email list. I will send you information that will help make you become the perfect investor. I can make you good at this stuff, but I don't need you to pay money necessarily. I just want you to pay attention. There are things, if you want to pay money, you can, but you don't have to. I just want you to pay attention because this is where you change your generational legacy. This is where people get rich. The Kennedys got most of their wealth during the Great Depression. During the Great Depression, did y'all know that? That literally the depressions and the recessions and the downturns are when people actually get rich because all they do is they buy low, sell high, just like gentrification. The reason that you now see Starbucks and dog parks and a Whole Foods store in the same neighborhood where you once had crackheads, hookers, and dope dealers on every corner is because people bought that property when it was cheap. They bought it when nobody wanted it. And then they made it into a community that everybody wanted to live in, and that allowed them to get rich. So the same thing is happening now. You're going into a bad neighborhood economically. You're going into an ugly stock market. It's a pain in the butt. It's really tough to go in here and buy. It really hurts your stomach because you're not making that fast money. If you're addicted to the fast money, then you're probably going through some withdrawal right now, and that's life. But remember, investing is not about getting rich quickly. Investing is about getting rich slowly. That's how people build long-term wealth that's actually stable. I learned that this week, actually, when I went to Yellowstone and we started a fire and I put paper on the fire and the fire went way up when I put paper on it. But then I realized that I needed to find a way to make the wood burn in order to get a fire that actually lasted. So building wealth is kind of like building that fire. And I'm a terrible fire builder. I learned that this weekend. All right. So a couple things that also are going on is I would mention consumer sentiment being at an all-time low. That means investors are not going to invest as much. Consumers aren't going to be as willing to buy. This is probably going to tip over into a recession at some point. Right now, the gamble is whether or not we're going to end up in a recession or not. The reality is that we probably are because I can't see how they're going to get us out of this without causing a recession. I'm looking here, and I was looking at a story. And I found a story where they basically said that the stock market tends to lose a third of its value heading into recessions, according to RBC. They said fears of a recession recently pushed stocks back into bear market territory on Monday. Bear market territory is 20% off the previous high. So if the stock market closes more than 20% off the previous high, then you are officially in a bear market. Historically, the average bear market lasts about 14 months. So that means that if you are an investor who can hold on for 14 damn months, 14 months, that ain't even a long time. If you have a newborn baby in 14 months, your newborn baby will still be a newborn baby pretty much. He'll be a 1.5-year-old. So if you can hold on for 14 months, historically, that typically means that you're going to get something back on your investment. So let me keep going here. They said that the Wall Street firm studied U.S. recessions and market performance since the 1930s and found that the S&P 500 has fallen an average of 32% from peak to trough. That means from the top to the very bottom during those downturns. So about 32% is the typical pullback. We're at about 21%. So if you use that as a historical indicator, then you will believe that the market has about another 10% that it could drop. I don't think that's a hard and fast rule. I don't think that necessarily is automatically going to be the case. Jeremy Siegel, a professor at Wharton, who I respect immensely, made a good point where he said that in all these other cases of recessions and all these other cases where you've been trying to deal with downturns and all that, you never had such a low interest rate environment as you do right now. And so he doesn't believe that we need to go down a whole 32%. I don't believe that either. I'm buying stocks. I'm buying as we go down. So if the ship is burning and going down, then I'm going to be bloody and burning with the ship because I'm finding strong companies and I'm investing in those strong companies. If you want to know a strong company that I like right now, well, Amazon just did a stock split. My Lord Jesus, Amazon is always going to know how to make money. Amazon is a great place to invest your money, that where you may not necessarily be making a ton of money, but they are smart. They know how to make money for their investors, and they are doing good things. If you want to get real frisky and real risky, some people are looking at Tesla. I'm not a big fan of Tesla because I think Tesla has a lot of risk that comes from Elon Musk and his outrageous behavior. I think Elon Musk is a great guy. I think he's brilliant. I love the fact he's going to Mars. I love some of what he's doing, but I think at some point Elon Musk is going to push the envelope a little bit too far, and he's going to have some problems. He's either going to have some problems in China, or he's going to have some problems in the U.S. with the authorities in the United States. And I think that's going to derail a lot of what he's trying to do. So ultimately, I'm not a big fan of putting money into something like Tesla. But if you have an appetite for risk and you're feeling a little frisky, some would say Tesla could be a good bargain right now. But I'd rather go with something like Amazon, because Amazon tends to be more stable in terms of how they make their economic decisions. So if you want to know the stock that I like right now, it's Amazon. They just did a stock split. I think long term, I don't really see how you could go wrong with companies like that, or Google as well. I think Google talked about a stock split as well. So a lot of these companies are splitting their stock because they're trying to give their investors some kind of ROI, some kind of yield, some kind of benefit. And that's what you're dealing with right now. Okay, guys. All right. So anyway, that's pretty much my analysis for today. I'm going to come back in a little bit later and keep talking to you guys about what I'm seeing in the market. Right now, it looks like the market is down about 800 points so far this morning. Let me see. European stocks are getting killed. Actually, it has gone up a little bit from 800 to 600 points down, which that doesn't make you feel much better. Bitcoin's below 24,000. $200 billion was wiped off in the crypto markets this weekend alone. That's pretty bad. And also, there's a story here that says every S&P 500 stock is down on Monday. So this is very rare. They said that it's very rare that you have a time where every single stock in the S&P 500 is down. They said that every single stock in the S&P 500 was down on the day, with the best performing name being Duke Realty, which teetered around the flat line. The worst performing S&P 500 component was Signature Bank, which fell 14% as crypto prices got slammed. It's rare to see this type of indiscriminate selling of stocks. Even at the onset of the COVID-19 pandemic, when the market was under severe pressure, investors would see some stocks going higher on an intraday basis. This selling has extended well beyond the S&P 500 and stocks in general for that matter. At the New York Stock Exchange, roughly 28 stocks traded lower for every single advancing stock. In other words, more than 2,900 NYSE listed names were down, while just 105 advanced. Looking beyond the stock market, bond prices took a beating as well. Meanwhile, commodities ranging from gold to oil were also under pressure. Gold futures dropped 2.6% to $1,827 per ounce. West Texas immediate futures, this is crude, this is oil, fell 2.2%. So they said the silver lining of this sort of indiscriminate selling is it might precede a bounce higher in stocks. Technical analysts tend to look for washout events like these to signify that a possible short-term bottom may be forming. But you'll be hard-pressed to find anyone willing to call a bottom heading into this week's Federal Reserve meeting. The central bank is largely expected to raise rates by 0.5 point on Wednesday. However, expectations for a 0.75 percentage point increase are on the rise after last week's hotter than expected inflation report. Let me translate that for you. I read a lot. It may have sounded like I was spitting out information a million miles an hour, but let me just slow it down real quick. I'm gonna do it like the old Pimp C rappers used to do when they would slow it down, the scissor music where they would play it real slow. So I'm gonna explain this real slow in terms of what's going on and what I just read. What I just read to you is that you probably have an overreaction in the market. You may have a bounce this week, because when you get to the point where the market decides that every single damn stock is terrible, they're clearly overreacting. It's no different from when the police, when the police go in a black neighborhood and there's like 20 black males and they know one of them committed a crime. What do they tend to do? What do the police always tend to do? My cousin got caught in a situation like that, and I told him to be careful, quit hanging with them thugs. But what do they tend to do? They lock up everybody. They go and they lock up everybody, right? And it's not right? Because 90% of the people you're locking up didn't do anything wrong. But they do that because they're overreacting, because they're so scared of black men at that moment that they lock up everyone. Well, the same thing is true with the stock market. Investors are scared, they're freaking out, they're kind of nervous. So ultimately, they're just taking down all the stocks. And all these stocks ain't bad. All these companies are not garbage. You got to know the difference between the quality investments and the low quality investments. Some of these companies are diamonds in the rough that are going to make a ton of money in the future. So what this means is that you could have a bounce in the market. This bounce probably won't occur until there's more information released by the Fed. When the Fed makes their announcement Wednesday and talks about what they're going to do right now and what they're going to do in the future, that's going to really ruffle your stock. So you're going to have some volatility this week. The only thing that we can predict right now is that you're going to have an up and down market, a lot of chaos, and you have to be able to stomach it. So you may want to buy some stock and look away. Just walk away, look away, do something different, or you could watch it and buy more as the dips occur. That's what I'll be doing. So that's my 2 cents. That's what I'm saying. That's what's going on. So I hope that this helps you. I hope that you make a ton of money. Don't panic. These things happen all the time. But at the same time, there are some long-term economic problems that have to be addressed, and hopefully the Fed will address them appropriately. All right, guys. So one more time, some of you asked about that URL for the Black Wealth Bootcamp. If you'd like to go take a look at the Black Wealth Bootcamp, just go to blackwealthbootcamp.com. It is the most popular, most powerful program we have at the Black Business School. It will transform you and your family for life. It's a lifetime membership, and you can get 20% off by using the code word Dr. Boyce, all one word. Just put that code in at the end and you'll get 20% off. I guarantee you love it. There's a 100% money back guarantee if you're not happy for any reason, but I know you're going to love it because thousands and thousands and thousands and thousands of our people have already gone through the boot camp. This will get you to the level of economic understanding that you and your family need to do. I encourage you to not just do it yourself, but also do it with your family as well. So anyway, guys, I'm out of here. Have a great day. It was wonderful speaking with you, and God bless you, and I hope you make a ton of money. Talk to you soon. Peace.